Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2024, and we're diving into THOR Industries' latest earnings report for the first quarter of fiscal year 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. THOR Industries, the world's largest manufacturer of recreational vehicles, has just released their Q1 fiscal 2025 results, and there's a lot to unpack, especially given the current market conditions.
Revenue and profitability overview. Let's start with the top line. THOR Industries reported net sales of $2.14 billion for the first quarter, a 14.3% decrease from the previous year. John, what are your thoughts on this decline?
The decrease in net sales is significant, but it aligns with the broader market challenges THOR is facing. The gross profit margin also saw a decline to 13.1% from 14.3% last year, reflecting the tough retail and wholesale environment. Despite these challenges, THOR's strategic focus on aligning production with market conditions is crucial for long-term stability.
And what about their profitability?
THOR reported a net loss of $1.8 million, translating to a diluted EPS of 3.3. This is a stark contrast to the $53.6 million net income and 99 EPS from the same quarter last year. The loss is partly due to strategic, non-recurring costs aimed at future savings.
Segment performance analysis. John, can you break down the performance across THOR's different segments?
Certainly. The North American towable RV segment saw a 4.9% decline in net sales, despite a 6.8% increase in unit shipments. This was offset by an 11.7% decrease in net price per unit due to a shift towards lower-cost travel trailers. The motorized RV segment faced a more severe 29% drop in sales, primarily due to a 33% reduction in unit shipments.
And how did the European segment fare?
The European RV segment experienced a 14.6% decline in net sales, driven by a 27.4% decrease in unit shipments. However, there was a 12.8% increase in net price per unit, partly due to favorable foreign exchange rates. The order backlog presents a mixed picture, with some segments showing improvement while others face challenges.
Strategic initiatives and future outlook. THOR has undertaken several strategic initiatives this quarter. Can you elaborate on these, John?
Yes, THOR incurred $15.5 million in strategic costs this quarter, including restructuring and facility closures. These actions are expected to yield over $10 million in annual savings. The company is positioning itself for efficiency and is optimistic about a market recovery in the latter half of fiscal 2025.
What does the future hold for THOR Industries?
Despite the current challenges, THOR has maintained its full-year guidance, expecting net sales between $9 billion and $9.8 billion, with EPS ranging from $4 to $5. CEO Bob Martin remains optimistic, anticipating a stronger retail market in North America as fiscal 2025 progresses.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 67 cents for this quarter. How did THOR's actual performance compare?
THOR's actual EPS of -3 cents fell significantly short of the 67 forecasted by analysts. This miss highlights the impact of the challenging macro environment and the strategic costs incurred during the quarter. It's a clear indication of the hurdles THOR is navigating in the current market.
And what does this mean for investors?
While the EPS miss is concerning, investors should consider THOR's long-term strategic positioning and the potential for market recovery. The company's focus on efficiency and innovation could pay off as conditions improve.
Key takeaways. In summary, THOR Industries faced a challenging first quarter of fiscal 2025 with significant declines in sales and profitability. However, their strategic initiatives and focus on long-term growth provide a silver lining. John, any final thoughts?
THOR is navigating a tough market with discipline and strategic foresight. While the short-term results are disappointing, the company's actions today could set the stage for future success. Investors should keep an eye on market conditions and THOR's ability to capitalize on a potential recovery.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on THOR Industries' performance in the comments below. Until next time.